Hello again, traders. Doing trouble there from Drfx, swing trading mentoring. Gonna be taking a look at a recent trade that was made on the Canadian Swiss franc, which provided me and my subscribers with a trading gain of 40 pips, as we took advantage of the consolidation setup that was gradually being formed on the daily chart of this currency pair. Now, all of my trading is done within the context of consolidations on the daily chart and the forward chart. What we will be doing is to either trade between the boundaries of resistance and support once the consolidation has been completed, or we actually identify the early waves that are telling us the market is going to be forming consolidation and trade these waves until the consolidation has been finally completed. Of course, everything is done within the context of the daily chart and the 4-hour chart. Market direction and market pattern is determined by the signals provided by the daily chart and the 4-hour chart. So we use Japanese candlestick signals, trend lines, as well as consolidation setups to identify market direction. And once a trading opportunity has been identified, entry then takes place using the signals and patterns provided by the 4-hour chart. Of course, to protect the trade, it is very important to place our stop loss at an area that is going to be strong enough to protect the trade. And so in most cases, what we do is to use the 4-hour chart as well, using trend lines and consolidation setups, as well as the highs and lows of candlestick formations and counter trend line setups to protect the trade until the trading target has been hit. Now, the main objective is to capture a trading gain of between 50 and 70 pips within 24 hours using those signals and patterns provided by the daily chart and the 4-hour chart. However, where justified and possible, such as was the case with the Canadian Swiss franc, we also target trading gains of between 30 pips and 50 pips, also holding them for a maximum holding period of 24 hours. And where justified, we'll also be trading, aiming to capture trading gains of between 70 pips and 100 pips, and extending the holding period from 24 hours to 48 hours in order to capture those larger pip movements. Now, this was a situation on the Canadian Swiss franc daily chart a couple of days ago, where based on the signals that have been provided so far on this time frame, it looked as if the market was going to be forming a range consolidation setup. So you can see that the market had already formed the support boundary with these two support points, and one resistance point had already been formed. So what was needed now was for the market to provide us with a second resistance point that would complete the formation of the resistance boundary and then lead to the bearish movement that would take us back down to the support, and in so doing complete the formation of the range consolidation setup. So this was the overall setup that was predicted a couple of days ago, and this was a situation on the 4-hour chart as well. You can see that the market had actually started this bearish movement to possibly start the downtrend and take us back down to the support boundary. But the concern that I had was that even though this was a bearish engulfing candlestick formation, it was not the strongest. And so there was an element of risk to actually trying to open a position to take advantage of this downtrend. So a much stronger signal was preferred. And so I decided that we would wait a few more hours until the market eventually provided us with that signal. And as you can see here, the market did in fact provide us with a much stronger signal in the form of this bearish engulfing candlestick formation. And so entry took place at the close of this candle at 5 p.m. Eastern Standard Time yesterday. And to take advantage of it and to protect the trade, the stop loss was placed at 0.7563, just above the formation, with the trading target set at 0.7480, just above the support boundary. And as you can see here, the market did in fact and eventually responded to this bearish signal and provided us with a trading gain of 40 pips as it eventually made its way down towards the support boundary. You can also see here that the market did in fact complete the formation of the range consolidation setup on the daily chart. Bearish engulfing candlestick formation was given to take out this previous bull candle, and in so doing it led to this bearish movement that took us down to the support boundary and led to the completion of this resistance boundary with the formation of this second resistance point to complement the support boundary that had already been formed. And of course, you can see the summary of this trade result from my live account with FX Pro. This was the email alert that was sent to me informing me that the take profit was filled. The take profit was filled on this position on the Canadian Swiss franc. And you can see here that it provided us with a 40 pip trading gain and a rate of return of 2.1% on my live account. So in summary, this trade was basically a very typical example of how we take advantage of the formation of consolidation setups by using the signals and patterns provided by the daily chart and the forward chart. So this consolidation was eventually completed with the bearish movement, and the initial signal was given on the forward chart was a bearish engulfing candlestick formation, but this was deemed to be a little bit too weak and hence a little bit too risky to actually trade. So it was only when the market provided us with a second and a much stronger signal that I felt it was justified to actually open a position. And as you can see, as you saw, this actually resulted in the successful movement toward support in providing us with a trading gain of 40 pips and a 2% rate of return on my live account in just 17 hours. So a very good trade, a very quick trade that, as I said before, is a typical example of the type of setups that we trade, where we're either trading between the boundaries of resistance and support that have already been completed, or we trade the waves, bullish and bearish, that eventually lead to the formation of consolidation. So you don't actually have to wait until the consolidation has been completed to then trade it. Once you can spot the early waves that tell us that the market is going to be forming consolidation, you can trade these waves for early gains until the consolidation has been completed, and then continue to trade between the boundaries of resistance to get additional trading gains from these setups until the consolidation breakout eventually takes place. So if you have any questions, you can let me know, and we're going to be looking out for more setups like these to finish the week on a much stronger note with additional trading gains. So if you have any questions, you can email me, and I can answer them to further go into detail in terms of this type of trade setup. So until next time, traders, happy trading.